Geopolitical tensions, rising demand and falling investments. What's in store for the crude oil market in 2015? How will it impact crude oil prices? And what about the outlook on gas, coal and renewable power? In this special show, I have with me the Chief Economist of the International Energy Agency, the IEA, Dr. Fatih Birol. Dr. Birol will soon take over as Executive Director at the IEA. Welcome to the show, Dr. Birol. And let me start by asking you about the key challenges facing energy markets in 2015.
When we look at the global energy markets, there are a few challenges in front of us. The first one being on the oil markets. It may seem surprising, but the oil markets, I believe, will face significant challenges. The prices, what we see, they are going down, which is a very good news for the countries like India, as their oil import bill is going to go down. But when we look at the countries which are producing significant amount of oil today, especially the ones in Middle East, they have significant geopolitical problems. When we look at what's happening in Iraq today, in Libya, Syria, the problems with Yemen and Saudi Arabia, in terms of gas, Russia-Ukraine crisis, they all tell me that the oil security, energy security, may well rise high in the agenda. In terms of India, of course, the lower oil prices is a very good news for India. When we look at the last 5 years, before the prices dropped down, India every year paid about $135 billion to import oil. But with the lower prices today, around $60, this $135 billion will go to levels of $65–70 billion, which provides an about $65–70 billion saving for the Indian economy.
Dr. Birol, I'll come back to India in just a bit, but I do want to get your assessment of the current geopolitical situation in the Middle East, the recent events that we've seen unfold in Yemen, and I'm going to add to that the deal that is potentially about to be struck with Iran and the implications of that on the energy business.
When we look at the Middle East, first of all, I should say that Middle East is and will remain the most important oil production region in the world, which will export oil to Asia, to Africa, to other countries of the world. And when we look at the geopolitical problems in Middle East, I am sorry to say that I believe these problems are not one-off type of problems. They may well be structural problems. For example, the very issue of ISIS today in Middle East, it may well be a structural issue. The problems between the Yemen and the other countries in the region, they may well be long-lasting problems. From that perspective, I believe oil security will be a very important issue, and India making strong efforts to increase its stocks, oil stocks, in case of an emergency is a very well move in the right direction. Coming to Iran, of course, Iran has huge reserves, oil and gas reserves. But to have the reserves and the produce that reserves, there are two different things. Iran, if all the problems with the international community is solved, for sure, Iran will need substantial amount of investments and access to technology in order to increase its production. So therefore, I do not think that Iran will very quickly and in a substantial way bring large amounts of oil to the markets. It will take some time, but if Iran solves its problems with the international community in the future, Iran may well play a more important role than today now, both for oil and natural gas.
Okay, I do want to talk to you about the implications of these changes taking place in the Middle East. First up, on what that means for OPEC, which many analysts and experts now say is behaving less and less like a cartel, with individual members fighting to maintain market share.
I believe OPEC questions, the challenges between the different OPEC members are questions need to be addressed by OPEC members. But what I can tell you is that the Middle East countries, they are the bulk of the OPEC members today, they are extremely important for the global oil markets. We all talk about the US shale revolution, which is a very good news because we see that a lot of oil is coming from the United States. But we all have to understand that the production growth coming from the United States is good for the United States, good for the rest of the world, but US is still, America is still a significant oil importer. America will never be a major oil exporter like Saudi Arabia. So therefore, the exports from Middle East will be crucial for many, many countries, including India, including China, African countries, and others. Therefore, what happens in Middle East in terms of geopolitics will determine the markets, will determine the importers such as India for many years to come.
In which case, how would you assess the impact of these security concerns that you've been talking about in the Middle East on the crude oil market and its dynamics, demand, supply, and of course prices?
Today, the oil markets are well supplied. There are two reasons for that. First, we have seen an unparalleled growth of production in the United States and Canada. This is one. Second, at the same time, we have seen the demand being historically very, very weak. But this will not continue because the US production growth is set to slow down, and with the consolidation of the global economy, oil demand will increase. So therefore, my main worry is the following. In order to see a production growth from Middle East to meet the growth in the oil demand coming from India, coming from China, other Asian countries, and from other parts of the world, we need to invest in the Middle East oil production today. But when I look at the numbers we have in hand at the International Energy Agency, we see that the appetite for oil investments in Middle East is close to zero. And there are two reasons behind that. One, the lower oil prices. But second, and more importantly, the security issues in Middle East give very little appetite to investors to invest in Middle East. Because countries do not know, companies do not know what will happen in Middle East, and they are worried about the predictability of their investments given the security situation today. And if the investments continue to be very weak or close to zero in Middle East, we will not see a production increase in Middle East, and in the future, this may well be a major challenge for the oil markets.
Okay, I do want to come back to investment in just a bit, but first I want to sort of examine the demand situation right now. Now, the IEA March report indicates that demand for oil bottomed out in the second quarter of 2014 itself. So demand, in fact, increased by 0.9 million barrels per day in the last quarter of the last calendar year and by 1 million barrels per day in the first quarter of 2015. First up, can you tell us where this increase in demand is coming from?
The increase of demand is coming mainly in three different areas, the growth of demand. First of all, the Asia, China and India, the economy is thankfully still growing in both of these countries, and they will give a boost to the oil demand growth. Second area is the United States. US economy is performing well. When we look at the numbers in terms of employment, in terms of trade, they are proven to be going in the right direction, and the consolidation of the US economy gives a boost to oil demand growth in the United States. And the third area, which is another major oil consuming region, is Middle East itself. Middle East countries with the growing population and not doing very bad in terms of oil gives also some contribution to the oil demand growth. These are the three areas which are the engines of the oil demand growth. But the pace of the oil demand growth, which will be very much hinged on the economic growth in these countries, what will be the economic growth in India, in China, in the other parts of the world, will determine how much the oil demand will grow in the next quarters to come. But our expectation is about 1 million barrels per day, but there may be definitely upward and downward adjustment to that number.
Okay, so you've got increase in demand on the one hand. You've got on the other hand, Saudi Arabia pumping at not full capacity, but close to full capacity. You've got record inventories piling up in the US. What does all of this mean for oil prices, at least in the near to medium term, sir?
There are two factors which will determine the evolution of this price. The first one is on the economic side, how the economy will perform in these key regions in Asia, in United States, and in Middle East in terms of consumption. But the second one is also very important. We shouldn't forget that. These lower prices resulted in substantial amount of cutting of spending of the oil companies. According to the numbers of the International Energy Agency, we believe in the year 2015, oil investments will drop by close to 20% compared to 2014. We have never seen such a big decline. Even in the financial crisis years, the decline was lower than this. So lower investments in the oil production, and this is mainly going to come from US and Canada and Brazil. The high cost areas will be affecting the supply side, so that the growth of supply may be dampening as a result of this lower investment, which was the result of the many companies cutting their spending, cutting their investment for future oil production in the year 2015 and beyond.
Okay, so this 20% cut, you've sort of explained where it's come from, the 20% cut in investments. Would you attribute a large of that to a slowdown, in shale projects in the US because of where the price of crude is right now? Would you say that it's also hurting other regions in the world, oil-producing regions, I mean, like, for instance, the Middle East, etc.?
There are two main reasons of this cut of investments, which is about, as I said, 20%, which is about $100 billion of cut. The first one is the lower oil price trajectory, which gives less incentive to the oil companies to invest because they think it is unpredictable, the situation. And this comes mainly from US, Canada, and Brazil. But second, as I mentioned, the second reason is in Middle East. As a result of security issues, security concerns, many companies are concerned about the future of their investments, and they are very reluctant to invest in the region, in many countries in that region, which they do not know how the political situation will develop in the next months, years to come.
All right, so I believe by your estimates, close to $100 billion in investments have taken a backseat right now because of crude oil prices. On that note, Dr. Birol, let's take a quick break. But when we come back, we'll speak to Fatih Birol about where crude oil prices are headed and the energy investments that India needs to put to work. That's coming up next.